Hey guys, this is another screener. I've never used this before, to be honest with you, but to be honest with you, it's not easy to get to. I basically had to search for it in the search box. But basically, it's a stock screener. Just to show you how many mega cap companies there are only 44. Large cap, there's 820. So, I mean, this right here is the pool like Warren Buffett has to work with, mainly, not totally, but that's to say, as you get more money, your pool of possible investments just diminishes so much. There's how many large caps, um, mid caps, you got 1,000, small caps, and micro caps. I'm just curious what these. Now, why would that change anything? All right, we came up with one thing, and I was just putting in some criteria. Here's the options. Most things I buy don't even have a um, consensus. 3% dividend. P of 2, that's really good. So, I mean, you don't have to do all the research yourself if you trust some of these guys, you know. Let's say this guy's an awesome picker or something, you know, you could just see what this guy's picking. I don't know, maybe you got to have a membership for that. Um, let's see. These are like the competitors. Their 5-year return doesn't look too good, does it? A real estate investment trust in the hospitality sector. 25 hotels in New York, Washington, District of Columbia, Boston, Philadelphia, South Florida, and California. Risk, price momentum, insider trading, relative valuation, fundamental, and earnings. The PE looks really good. But like I said, usually I look for stuff that's so cheap that you can't even. Uh, there's no question of whether it's cheap or not. Now let me take you to one that I personally own. SID. Let's see. Downgrade, 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 downgrade. The book value per share is 280. It's trading at 246. The cash per share is $2.02. The dividend is 76 cents. It's trading below book value. Forward PE of 7. The earnings this year has got killed. Only have I think 100 shares, no, 200 shares, and I'm down on this one. I think I bought it around $4 or $5. I'm down pretty much 40% or so. Why did I buy this one? Basically, this company had met my screener at the time. Um, but basically, this company is a steel company in Brazil. In Latin America, you know, I love Brazil and I love Latin America because it's not in the U.S. and things in the U.S. are very expensive, generally speaking. It operates through 5 segments: steel, mining, logistics, energy, and cement. I like steel, I like cement. But the reason I bought this thing is it was trading so cheaply. I mean, they still got almost a 10% dividend. Yeah, they lost 9 cents a share. Um, So Guru Focus has a value score of 91 out of 100. Profitability rank, growth rank. Here's the book value per share right here, $2.87, which is higher than the current trading price. During the past 13 years, the highest price to book ratio of SID was 8.52, and the median was 1.76, and the lowest is 0.72. And it's not going to show me some stuff because I'm not a member. Now, as a value investor, I basically want growth for free. I don't know how they determined that I was a 10 out of 10. I don't know why they got two PE ratios. They got a negative earnings per share right now. That's why this ratio is so bad. But the price to book is 0.88, so it's almost the lowest it's ever been, really. Schiller PE of 5 is ranked better than 90% of 400 companies in the steel industry. Well, that doesn't look good. This is saying the net asset value is negative, but it's trading below book value. I'm definitely not selling and taking a 40% loss, so I'm just going to wait and see what happens. Total garbage, that's what I like to see. One of the best stocks to buy today. This has the enterprise value at 9 billion, although the market cap's only 3 billion. Price to book 0.88. Now, the only thing that's a little complicated when you're dealing with a company that's not a U.S. company is the market cap is 3 billion, but Yahoo has the balance sheet total cash at 13 billion. I think so. I might be wrong on this, but let's just say 13. It says B with a currency is in Brazil. Okay, so this is really like 2.6 billion US dollars. As you can see, the market cap is 3.26. So, to me, you're protected on the downside from their cash position. And this says gross profit 13 billion. It's really like 2 point something billion. I'm not sure if that's accurate. I don't think that's accurate. But basically, I had bought this thing based on the valuation metrics. And like I said, you can't always trust Yahoo. I don't know why I'm not able to see stuff anymore in these other countries. It's kind of disappointing. Um, you used to be able to see stuff there. No, I don't want Portuguese. But you can download the earnings and stuff. Shit, where's fucking English at? All right. Well, I'm not sure how to change this to English. There's got to be a way, right? I can see that's 2.3 billion. I'm sure they got this broken down in different sectors. You know, they got like a steel section, they got a cement section. But it looks like the steel section's 50%. This is like cement, I believe. The energy section is very small, logistics and minerals. The parentheses is usually a negative, whereas if it doesn't have parentheses, that's a positive number. Yeah, I still don't know how to change this to English. CapEx is usually capital expenditures. They got it projected all the way to 2037. These are all the different segments. You know, like this is the mineral one. This, I think, is the steel one. Cement, as we got the pictures here. But steel is 50% of their business. And I expect steel to be going up the next couple of years. So yeah, unfortunately, I can't tell you what all that means, and um, let's see. Yeah, it doesn't let me switch to English. But as you can see, about 18% of the shares are on the New York Stock Exchange as ADRs. 40% are held by whatever this is, and 10% by whatever that is. So to me, I like to see a dominant owner. As you can see, this company's been around for a while. I mean, it's been around. Well, in 2041, it'll be around for 100 years. So in 2000, this guy increased his ownership in the company from 14% to 46%. That's what I like to see. So even though I'm down 50% this year almost, this guy's never going to sell. He's got the other 50%. That's what makes me think we're near the bottom here. CSN acquires Metallic, a two-piece steel can factory, the only company in Latin America to manufacture this high-tech product. The company acquires 50% of the capital of something in Portugal. Now holds 100% of the container terminal at the port of something and 49% of the shares of whatever that is. Acquires the remaining 50% of that, so becoming the owner of the entire capital of this company. Acquires 100% of the shares of these mines. Another, acquire some more stuff. The largest mining company in the world, one of the largest. So as you can see, this company, even though it was a 100-year-old company, they're acquiring more and more stuff as the years go on. I think Warren Buffett said, when you purchase a company, when you're buying a business, you want to account for all the cash flows that business will put out from now into Judgment Day. See's Candy was I don't know, if they bought it for maybe $25 million and it has produced $2 billion in profit. An incredible investment. But I know that only very few people in Brazil what does this say, guys? Less than 1% of Brazilian adults invest in the stock market, a proportion that is minuscule compared with the U.S. equivalent of around 40%. The retail allocation to equities in Brazil is as low as 10%, which is insignificant when compared with the allocation to pension and fixed income, which dominates at 72%. So, when I bought this thing, it was probably trading at a PE of 2 or something. I mean, it's negative right now, so it doesn't have a PE, because a PE is basically price to earnings ratio. If their earnings are negative, it's not going to give me a PE ratio. But if you look at the history of this thing, it really hasn't done much in 100 years, or however long it's been listed publicly, since 96 maybe on the New York Stock Exchange. But look at these spikes. I mean, I don't know if it's ever going to spike up to there one day, but I mean, May 2021 it spiked to $8.50. And if you're buying at $2.50 and it goes to $8, That's what, 3 times your money, and you can get a 10% dividend while you wait. I mean, this year's the earnings were down. The year prior, I mean, last year's earnings were down. The year prior, they had 12 billion. And these are probably in Brazilian currency. But this thing was a cash flow machine. And they pay a good dividend. They're constantly acquiring stuff. They're in the steel industry. They're in the cement industry. In America, when steel was produced, that created skyscrapers and stuff like that. And in order for these, I wouldn't want to call Brazil a developing country, but a lot of the other countries around the world that quote unquote are developing countries, what do they need to grow? They need steel, they need cement, they need all these kinds of things. They need cement for roads, they need steel for skyscrapers and buildings, and goods that are locally produced and locally consumed basically can dominate a region, and businesses that dominate a region can do really well. Like Walmart is the perfect example of some place that dominated a region. And I don't like Walmart going to other countries around the world because they get their ass kicked, to be honest with you, because they don't dominate that region. But yeah, I'm down on this thing. Like I said, probably 40%. I mean, maybe I could have sold up here, took a small profit, or broke even, but I think it's worth a lot more than $4.46. And the main reason the U.S. stock market is so overvalued in many cases is not only do you have half of all Americans basically buying U.S. stocks in their retirement account, but you also have country people from all over the world that are buying U.S. securities as well. Why? Because maybe their currency in their country is not stable. Maybe their economic position is not stable in their own country. Maybe they're at war. There's many different reasons why people invest in other countries. The U.S. is a developed economy, and the results can be forecasted, and I wouldn't say predictable, but there's, I can tell you if you buy Coca-Cola today, they're going to be around for another 100 years. You're going to get a 3% dividend or whatever it is, and you'll do okay. This was another company I had actually done really well in, and I had bought this one when this is another steel company. Steel and mining. But I had bought this one in the middle of the pandemic, and I want to say when I bought it was around I think it was around here, somewhere around here. I think it was below 18. So somewhere in here had a crazy dividend. It was like 10% or more. It's still pretty cheap. The P ratio is 6. Still paying a 7% dividend. If you bought it when I had bought it in the middle of the pandemic, uh, you almost would have tripled your money by now. Say if I bought it at 15, a double 15 is 30. Plus 15 again will be 45. So it's really not far from a triple up. And as you can see, it passed 45 a year and a half ago or so. So this was another steel company that I had, and unfortunately, I don't think I held till 30. I think I got rid of it somewhere in below 30. But yeah, for the long-term investors, if you had bought this thing at 18 and and held today, and you're still getting a 6 or 7% dividend, actually you're getting a lot higher because you bought it down here. So you would still be getting your over 10% yield. And on top of that, the price went up double. Well, actually triple, but you only made double because you bought it at 15. So this is what I have hopes of for SID. Something similar. And as you can see, even this company had some rockiness going on. But yeah, for the last month, it's just gone straight downhill. And like I said, that one guy owns 50% of the shares, so even though it's gone down 40 or 50%, I bet you that guy that owns 50% of the company is not selling. And the guy that owns 10% of the company is probably not selling. So you're protected on the downside. The same thing with like Berkshire Hathaway, where Buffett owns half of the shares. I don't know what's going to happen when he dies. You're protected on the downside because Buffett's never selling. So if the thing has already gone down 50% in the last year or so, you're protected on the downside 50% by the owner who owns 50% of the company or close to it. And then the other guy that owns 10%. To me, it can only go up. Now maybe the ceiling's capped at 8. Maybe this is the ceiling right here. $9, but I don't know. They seem to be doing acquisitions and stuff every couple of years. It seemed to be growing. Here again, we got almost a 10% dividend. So to me, this is a very low risk play. It's trading at 88% of book value. I think next year they probably will return to being profitable. I mean, look at the difference between those 2 years. But even if they only had, like, say, I don't know if this is in U.S. dollars or not, but let's just say that it's in uh, the Brazil currency, that's still at least $300 million profit. The company, the whole company's 4 billion. That's still 10%. I don't know, guys. I think it's way undervalued. I think they might have to cut this dividend because if they're earning negative per share, um, obviously they can't support that. But look at the cash. Like I said, we did the conversion earlier, and that's still like 2.5, 2.6 billion US dollars, and which is close to the whole market cap of the company. So, yeah, I think things in Brazil are cheap, and that's one reason I had put 10 grand into BAK. That's why I liked Petrobras. That's why I like SID. I think these developing countries, the ones that are growing, they need to put. And Brazil is already pretty modern, but they still got a lot of jungle and stuff in Brazil, and a lot of that's protected, but rainforests and stuff. But there's still even some native tribes out there that have never seen humans before. But just like New York or something, they need steel, they need cement, they make skyscrapers, to build roads. So that's why I invested here. Like I said, I don't have a very large position. I only have 200 shares that I had bought at I think around $4, maybe a little cheaper, somewhere around there. But I'm down at least 40%, maybe 50% on this one. But I'm not worried because I'm still getting a 10% dividend, and I've already got several dividend payments, so actually my losses are not as high as it may appear on paper. But anyway, thanks for watching, guys.